you guys are having a good day. I'm Dr. Boyce Watkins from Your Black World and the Black Business School. And I thought I would give you guys some updates. I'm going to give you some short, flash conversations all throughout the day as we kind of watch what's going on with the stock market. Right now, the market's hitting some pretty historically difficult times. We've actually seen this morning, as of March 9th, that the market has actually triggered what are called circuit breakers. And circuit breakers are basically when the market has to be shut down because the drop in stock prices has been so extreme. And so everything, you're right, Smokehouse Syndicate, everything is down. Today is a really tough day, for all investors. I mean, these are the days, this is when the storm comes, like New Edition used to say, can you stand the rain? Because everybody likes the sunny days, and you've had a lot of sunny days for a while now. Now, let me read some of this. This is from CNBC, and I'll give you guys updates throughout the day, mainly on the Black Financial Channel. If you don't know about the Black Financial Channel, that's our Black Financial News and Commentary platform. It's Black-owned. You can go to theblackfinancialchannel.com, THE. That's theblackfinancialchannel.com. It says, stocks tumbled Monday as investors brace for the economic fallout from the spreading coronavirus, while a shocking all-out price war added to the anxiety in oil. Price war in oil. Oil, basically, the price of oil has plummeted, largely because they made some negotiations with OPEC to keep the price of oil propped up, but it ends up dropping over 30%. Because the negotiations fell apart. So Saudi Arabia increased production, which dropped the price of oil. When the price of oil drops, then energy companies are going to have a tough time making their financial obligations, which could cause tremendous havoc on the economic system. And so effectively, you're having a double whammy right now. You've got the coronavirus concerns, which some people, including Dr. Drew, who's on, I guess, CNBC or not CNBC, CNN or wherever he is, he feels like the coronavirus panic is overblown, that the media is driving a lot of this. And I don't disagree with that assessment, but I'm not a doctor, but it doesn't seem to me that that the panic is called for. What he said, and I agree with this, is that the health professionals should be concerned about it, but the media probably needs to kind of chill out and be quiet, because they tend to like these sensationalist, alarmist headlines, because they know that fear, it's just like politics. Fear drives viewership. Fear also drives votes. That's why, whenever there's an election, they try to scare you into voting for the candidate they want you to vote for, as opposed to actually getting you to, see the merits of that candidate. So let me keep reading to you. And the market's about to actually come back on. I think it might have actually reactivated. It was supposed to reactivate at 9:49 a.m. Eastern time. And I'm just sitting here looking for any notifications. Normally my phone starts blowing up when there's a lot of activity. And so I don't see anything on my phone, which might mean that there's another circuit breaker in place. So let me read more. The Dow Jones Industrial Average tanked 1,800 points at the open, with the S&P plunging 7%. So a lot of people have seen a massive drop in their wealth, which is going to cause a lot of psychological and emotional reaction. The sharp declines followed a roller coaster week that saw the S&P 500 swing up or down more than 2.5% for 4 days straight. While Monday's drop was significant, it still didn't crack the 20 worst days for the S&P 500. So that's good news. The 20 worst days for the S&P 500, let's see, in 1932, right around the Great Depression, May 31st, 1932, you saw a 7.5% drop in the S&P 500. Now, today you saw a 7% drop. So, you're really talking about, you could compare this to the Great Depression if you wanted to. The worst day for the S&P 500 was 1987, Black Monday, which today is funny that today's a Monday also. I believe Mondays tend to be, I got to go look at the research, but I believe Mondays tend to be bad days for the market, mainly because you've got all this big, all this sort of clumped up information that sort of just gets dumped on the market at once. So, so in a way, it's kind of like all this stuff's been kind of stopped up. almost like to use a gross analogy, like you got to go to the bathroom and you're holding it in, and then just right. Like I know that sounds nasty, but yeah, right now you're kind of covered in shit because it's all just kind of coming out, right? And the other thing about a circuit breaker is that a circuit breaker actually reminds me. You guys know I'm getting married on July 11th, and one of the things we believe in is investing in our relationship. So we've always, Alicia's a therapist, and we actually have always been talking to a therapist about our relationship, not because we have significant problems, but because we actually believe in preventive maintenance. Like you shouldn't go see a therapist after you have a problem. You should actually see a therapist in advance as a preventative measure because a healthy marriage is very important for building your wealth and protecting your sanity in general. And so one of the things that the therapist says that I agree with is that you should actually if you get into an argument with your partner and you're fighting and you're yelling and screaming at each other, you should have a circuit breaker, just like the stock market. You should just call a timeout, go to your respective corners, and come back to the issue later on during the day, maybe the next day after you've kind of calmed down and processed things, so that you don't say something that you'll regret. Because emotions are very dangerous, not just in your most important investment, which would be your relationships, but also in other investments like the stock market. Emotions cause people to say and do things that they don't really mean. So when the market starts to tumble and plummet and go crazy, then you get investors that are like, oh my God, the world's coming to an end. I gotta sell everything. Oh Lord Jesus, what's gonna happen now? We all gonna die. Oh Lord, right? And the circuit breakers are there to say, okay, stop, time out. Let's chill out before we do something that we're gonna regret. We're gonna just 15 minutes, and we want you during that time to go process your emotions, process the information, figure out what's going on, and then we'll come back to the table and then we'll perform trades. So that's why the market stopped, and that's why circuit breakers are a very healthy thing. That's why it's very, very good that the market is kind of handling things in this way. Now let me see if I'm gonna look at for a quick update. Let's see if there's any updates on the stock market now, because I know that trading resumed. And let me see here. Dow craters 1,800 points and more than 6% after trading resumes. So according to CNBC, it looks like the market continued to drop. Stocks tumbled on Monday, blah, 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 blah. The Dow tanked 1,781 points, while the S&P plunged 6.6%. Okay, so now in this article, they're saying 6.6% as opposed to 7% that they said in the previous article, which could actually mean that you saw a little bit of an uptick. Which again is why the circuit breakers are good, because maybe they process the information and realize that 7% was too much. I don't know. Let me see here. I'm reading more here. Investors continue to seek safer assets amid additional fears that the coronavirus would disrupt global supply chains and tip the economy into a recession. Yes. So right now you're seeing a big move toward bonds. According to Cramer, let me look at what Jim Cramer is saying. CNBC's Jim Cramer said early Monday that the collapse in oil prices and bond yields puts the stock market in quote-unquote uncharted waters. Quote, the speed and thinness that you could have such a monumental move in 6 hours is truly astounding. The collapse in yields and oil is signaling an imminent recession. I agree with him. I think that we are headed toward a recession. It's probably so you got to kind of get ready. It's going to be some tough times economically. Nothing to be afraid of. The recessions happen all the time. The stock market crashes all the time, and it happens. You have corrections. You have bear markets. You have downturns. Just like you have bad days. You can't expect every day of your life to be a good day. At some point, you're gonna have a bad day. Every day you ain't gonna be going through life singing Ice Cube songs like today was a good day. Like some days you're gonna say, damn, like today was a really bad day. Now let me see here. Cramer also says as crude futures were plunging Sunday night after OPEC's production cut deal failed and the 10-year Treasury yield was making shocking new lows in a global flight to the perceived safety of bonds. Cramer tweeted that these moves are signaling an imminent recession. At 4:15 a.m. Eastern Time, Cramer went a step further, tweeting that the moves in oil and yields on top of the already widespread market concerns about the coronavirus are both unprecedented and exceed the chaos of 2007 and 2009. I agree. There's so much happening right now. There's so much information to analyze. Could there be a bank run, says STJ Jackson? There could be. This could cause an issue. This could cause some fundamental problems. Because I'm seeing some things that do concern me in terms of where the economy is going, and I think that's the difference so far. That's the big difference between now and 2007, 2008, is that now you have a little bit more security with the banks than you had back then. Back then you had a freeze up in liquidity, which caused the banks to be in jeopardy. Well, now with this whole issue with OPEC and the oil thing, the banks are going to have an issue with the oil situation, as well as the drop in yields from treasuries. You're sort of seeing the banks sort of getting pulled into this. So bank stocks have really been hammered, which could translate into liquidity issues with the banks, which could involve government, some sort of government bailout or something like that. So that's going to be the conversation in the next few weeks, I believe. Not more so than just the coronavirus. I believe that you're going to hear Congress debating how to kind of pull the economy out of chaos. That, I think that's going to be the discussion that a lot of the politicians are having right now. So that's going to be interesting to watch. So anyway, guys, I got to run. Alicia and I are about to go running. So I just wanted to come in and give you guys a quick update. I'll keep you guys posted on what happens all throughout the day. And if you want to join my stock market investing class, this is a great time to join because there's a lot going on right now, a lot to talk about, a lot of opportunities out there. So if you'd like to join, please visit theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. In fact, you can try the first 30 days for just $1, just $1, to see if you like the program. So anyway, I'm out of here, guys. Take care. Have a good day. Hit the thumbs up button. I'll see you soon. Bye-bye. Peace.